We got Brendan Intindola, if we can stop laughing, to tell us about the markets, which were mixed today. What happened?
What happened is it's a waiting game right now for the all-important monthly jobs report.
Tomorrow morning,
Due tomorrow
8:30
morning.
a.m. on this spot.
Correct.
Great.
Yep. Important, always important, but really important now because we're at what may be the tail end of a very significant rally. And in addition to corporate earnings, the jobs reading will tell the tale of whether this run-up in prices has been justified or not.
Okay, and Brendan, I've been, as we watch the market through the first month of the year, it's been a big rally. The thing that's impressed me is twofold. Number one, the rallies have been more impressive than the declines, as we're seeing today. And number two, volatility is kind of a no-show. We've talked about this last time you were on. We talked about it.
The swings in the market day to day have compressed, very much compressed compared to last year. The second half of last year, we had 100-point days in the Dow as a regular event. A lot of that is attributable to a lack of bad news, not so much good news, but less fear, less anxiety in the market, and people buying on modestly positive developments in corporate earnings and in the U.S. economy.
Bigger fear of missing.
He didn't mention Europe. Did you know that? Did you notice? He tried to slip it by us.
Yeah.
No mention.
No
of
mention-
Story
no
anymore.
mention of
It's
Europe.
not important anymore.
It's not important anymore. Do you buy
Because
that?
we fixed it.
Yeah,
That's right.
Pinocchio. But it's not fixed, and that's the problem, right? Europe is not fixed.
Look, that's going to be the big overhang. I mean, the Fed talked about it a week ago. If the European economies, compress to the point where, they double dip into a recession, they're going to be exporting that around the globe, and we're not going to be immune to it.
I mean, that's what I think too. And yet we hear investors say all the time, well, if the U.S. can get some momentum behind it, if the economy can continue to grow, then maybe that won't be a big deal. I think that's hooey.
Well, you're in the coupled camp as opposed to the decoupling camp.
Yeah.
People are focused on the positive right now. It's enough for them to come into the market and buy. But at the same time, one example of Greece causing some concern because they keep talking. Lots of talk about some sort of resolution with their bondholders. A week ago, it was hours away, days away. Yesterday, it was hours away. There's sort of this odd back and forth about these vaporous timeframes of some sort of agreement, which never seems to come.
And then, domestically, the trajectory of the economic data that we've been seeing, as we saw with the ADP reading on Wednesday on jobs, as we'll probably see tomorrow, is fairly constructive, even if the velocity is not all that powerful.
Right.
The trend is right.
So,
the numbers are not all
I'm
that
going
compelling.
to put that in another way. Yes, the economy is creating some jobs, so that's good. It's not destroying
sure.
jobs, but it's not creating enough jobs to keep pace with population growth. And that is the real bad thing, because if you haven't got enough jobs for the people that are coming into the workforce, then you really, in a way, like Alice through the Looking Glass or Wonderland, you have to run faster and faster so you don't go backwards.
With
Am I right about that? Yeah, I mean, that's the Alice in
Okay,
Wonderland.
but you're going to have to take off the bear suit at some point, because I think the important thing is to get the direction right, even if you don't get the kind of acceleration. I'll agree with you. These have not been blow-away numbers,
No.
whether you're talking about the labor market, the housing market, the manufacturing market. They haven't blown you away, but they're
right
going
direction,
in the right way.
right direction, not a lot of conviction.
Yeah, exactly. Good. Well put.
Well put. Now, gold. We've been seeing some action in gold. I mean, not huge action, but it's been creeping up now. It's in the 1700s an ounce. What is this telling us about investor sentiment? Is it telling us that there's still something of nerves there? $1,762 an ounce.
I think so.
I can remember when it was $300 an ounce. So, I mean, it's still kind of crazy to me. But up 1280 today. Is there a nervousness there? Does this indicate nervousness?
There is a nervousness there, and I think it loops back to the idea that equities may be kind of in vogue right now, but aren't being completely embraced. Silver as well has had a tremendous run in recent week or two.
Not to mention treasuries. I mean, what's the yield on a 10-year these days? You're still...
Get your micrometer out.
Yeah. To me, it's a little bit of a head scratcher that equities could be rallying the way they have thus far in 2012 at a time when the treasury market is trying to say, be afraid, be very, very afraid.
I'm going with the bond market, but you knew that. Anyway, we have to stop this discussion right
Seriously, doesn't that bear suit
now.
start to itch?
It's
hot.
itchy.
It gets very hot.
Thank you very much, Brendan.